Hello everybody, this is Gurpreet from Gold Mortgage Team powered by Centum Gold Mortgages FSRA 10319. Today we are going to talk about 5 C's of credit which are very important in qualification or approval of a mortgage. And today Mr. Pavit is going to talk about collateral. So can you briefly explain that?
Sure. This is Pavit Singh from Gold Mortgage Team. So the C that I'm going to talk, as Gurpreet mentioned, is the collateral. Collateral is an asset that a lender accepts as a security for the loan. So basically, collateral can take, of course, several forms. Mortgage can be collateralized by the owned property that you're going to get the loan on, or it could be any other property that you own and you have and some sort of equity into that existing property. And essentially, what I do want to mention here is that collateral could also be a guarantee from a guarantor as well. That could also be a collateral. And then how essentially the banks and lenders, they want the borrowers to keep up with their financial obligations. So it's good that we are basically here in our team. We do these secured loans, which is also a good opportunity for better rate of interest.
In other words, I will just put it in straight forward that real estate is the collateral when you're getting a mortgage.
Yeah.
So they use your real estate as collateral.
Yeah.
So our next topic is capital, and Mr. Mahesh is going to talk about it. And in general, everybody knows that capital is either the down payment or the equity in the property.
Absolutely.
So Mahesh, can
Absolutely.
you briefly explain that?
Yes, this is Mahesh here. Glad to be with Gold Mortgage Team. Yes, capital is one of the important C. And as Gurpreet ji said, it's basically a down payment. When you are purchasing a property, it's a down payment. And when you are refinancing it, it's basically called as the equity into the property itself. So more the down payment or the equity, better the interest rate. And that's how the lender assess the risk. And that's why it's important.
And also, I can add that if you have more down payment or the equity, it's easier to get a mortgage as compared to if you have less down payment. But there are solutions available with us. So call us even if you have less down payment. Our number to reach is 905-487-0796. And now we will move to the next topic, which is character. And Gurshan is going to talk about that. So Gurshan,
Thank you,
briefly, if you can
Thank you very
explain.
much. The character is a long-term behavior of a borrower to pay the loan in the past. Applicant's credit history or the score also show its character. Now these days, sometimes the builder asks for the mortgage pre-qualification letter to see the character of a buyer to whom they are selling. Like it shows his character if he can pay the loan. And
Basically, what they need to know is trustworthiness of that person.
Yeah.
If
Yes.
that person is trustworthy.
Right.
So that's what they want to know. So now we will move to the next topic. Mr. Balwinder is going to talk about that, which is capacity, where basically they check the ability to repay for some person who is getting the mortgage. Can you briefly explain that?
Thank you. My name is Balwinder Brar. That's also a important C. Is a capacity. Your capacity is your capacity is ability. Your ability to repay your loan, and lender can check your.
Basically, they can check your debt service ratios,
Yeah.
which is
Check your capacity in debt service ratio. You can how much debt you own and how much your income, and if a less debt ratio, that means lender can significantly less risk, and then you can get good product. Thank you.
Right. Now we are moving to the next topic, which Mr. Rishabh is going to talk about. It is the conditions. Can you please briefly explain how does it work?
Thank you, Gurpreet. This is Rishi from Gold Mortgage Team. I'm going to be talking about the conditions that bank considers to grant you a loan. Conditions such as interest rates, you're going to be getting variable or fixed. Mortgage terms of if it's a 1 year, 2 year, 3 year, or a 4 year mortgage term, your amortization period, 25, 30, or the purpose of your loan. We here at Centum Gold Mortgage team can help you guys with any questions that you have. Please call us at 905-487-0796. We are full-time agents here, and we'll be happy to answer any questions you have.
Now moving on to Mr. Vikrant. Now this is a little bit change from topic because we already covered the 5 C's. So can you please explain how the major 3 C's work if you take a example of refinance versus purchase?
For sure, Gurpreet. Thank you. First of all, this is Vikrant from Centum Gold Mortgage team. I'm gonna take 3 C's, which is capacity, character, and capital. In case of refinance, if you talk about capacity, your maximum loan to value ratio can be 80%. So you can only borrow up to 80% of your home price. Whereas in case of purchase, you can go up to 90%, and in some instances you can go even up to 95%. If we talk about capital, your equity is your capital if you go with the refinance, and the more the equity you have in the home, the more capital you bring to the table. Whereas in case of purchase, your down payment is your capital. As my counterparts already suggested, the more you bring the capital on the table, it's easier to get good mortgage rates.
So basically lenders feel secure. So if you have more down payment or if you have more equity in your property, lenders feel secure and they can easily approve you.
Yeah.
100%.
And the third C is character. In case of refinances, the client already have a developed character as compared to the first time home buyer.
Very good. Thank you so much. So let's move to a case study. Mr. Bill is going to explain a case study that how it works in terms of 5 C's of credit. So Mr. Bill, can you briefly tell us about that case study?
Yeah, thank you, Gurpreet. Thank you for the question. Hello, everybody. This is Bill here. I'm the Senior Vice President Sales here at the Gold Mortgage team. We specialize in hard-to-place complex deals. Our expertise is business for self people. We do big-time private lending and A-lenders. We definitely deal a lot with them. Anytime if the bank says no, we're here to say yes. We can get you the money in as early as 72 hours. Keeping in mind, we do need to get all the information up front from the client, but we're here to help each and every case. Coming back to the case study, we had a referral client that was referred to us by one of our previous clients. So bringing that in context with the 5 C's. So character number 1, she's a staff nurse at the town of Halton. She works at the Milton Hospital. So her character is basically her ability to pay, right? We can see that with her employment history that she was a strong candidate for the repayment of the loan. Capital is because she's a first-time home buyer. She's bringing her down payment. We got her qualified at 10% down payment. So that's her capital. Credit-wise, she has got an outstanding credit with 829 credit score. Collateral is basically, in her case, it's a down payment because she's a first-time home buyer. She had all the money sitting in her savings. Conditions is
so basically collateral, we are going to use the house she bought.
Yeah.
So
Yeah.
so the bank is going to use that as collateral.
Yeah, they are going to put a collateral on the property that she's going to purchase. Yeah.
Mhm.
Conditions is her repayment, term, amortization, her purpose of loan. Capacity is once again her job as a staff nurse to repay the loan basically. So that's how the banks or the lenders, they assess any client for whenever they have to advance the loans to them. We got her the mortgage from the A lender. She's a very happy client now. But again, she is one perfect case study. But for us, everybody is unique. Everybody is welcome here. even if you have low credit, or I wouldn't say no credit, but low credit definitely. We can take care of that. If you have some challenges in the past with your credit, with your down payment, feel free to give us a call. 905-487-0796 is our number. Once again, thank you very much for watching our YouTube channel. Please do leave your comments, feedback. We'll greatly appreciate it. I'll pass on to Gurpreet.
In the end, I will only say, even if you are missing two major C's here, still we can do a mortgage. So the two major C's here are credit. If you have low or bad credit, we can still do the deal.
Yeah.
And the second one is capacity. So capacity is basically your income. So even if you have issues with the income or your business or self, we still have products where we can do the deal. So call us for 905-487-0796.
Yeah.
Thank you so very much.
Thank
Have a
you.
wonderful
Yeah.
weekend. Next week, we are going to talk about refinance, and we will bring case studies of the deals which we did where that's credit card and line of credit debt at high interest rate. We combined everything into one payment, and it was much easier for them, and their cash flow increased by almost 3,000 to 4,000 every month. So if you want to learn about that, please listen to that podcast, which will be coming next week.
Yeah,
Thank you so much.
Stay tuned for that. And then July 13th, where Bank of Canada is having their next interest rate meeting. We'll be keeping a tight eye on that. And hopefully in the next podcast, we'll be touching base on that a little bit. But most importantly, refinance is our topic. It's going to be very, very interesting one for everybody watching out there. Thank you very much and enjoy the rest of the day.
Thank
Thank
you.
you.
Thank you.
Thank you, guys.
Thank you.